Good evening, all. Ira Epstein of Linn Associates, wishing everybody a Merry Christmas. I know it's going to be snowy in Chicago. First time in like 280 days or something, we're going to have measurable snow. Can you believe that, living in the Midwest? But we're getting it. I'm ready. I got my snowplow and my salt ready. I'm all there. We're at home, so it should be easy to keep up with. But I do want to remind you that today is Monday. It is the 27th of December, 2021. It's about 6:10 p.m., and Santa is in the building. Yes, he came. So for those of you that write me on the YouTube pages and the like, I don't think he's coming this year, you are wrong. Santa has arrived. You've got your rally going. You'll get back off during this. Why not? You're getting up to Bollinger Bands. You don't change your trading style just because the market's going up or going down. You pay attention to this and you understand that the market's got a lot less trading volume typically during this whole week than it does in normal times. People are gone. People are mentally saying, I've closed my trading book for the year. I'm enjoying this week off, blah, 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 blah. You're getting all that, the norm. You had a monster rally in stocks today. You're pulling back tonight, and why not? Big Monday ups, overbought. You get to Bollinger Bands, you typically pull back from that. In the energy markets, the markets also got up. You know, you're near $80 in Brent again. So understand how high you've gotten. You're flat in the bonds and notes. I am still of the school, and I'm hearing all the debates on TV. I am in the camp that is not committed. I don't believe that the dot plot that the Fed put out is right. I think they're too aggressive. I think you first take your foot off the gas, which we're doing by cutting the tapering. Then you pump the brake. You don't slam it on. We're not having, you have to prove to me we'll have that kind of inflation as we get out of this wave of Omicron and we get maybe into the second quarter of the year, and then prove it to me. So that is the camp I'm in. I want it to prove itself. I don't want to join in that I know wage inflation, and that's certainly here. Rent inflation is here. Food inflation to a degree is here as well. I mean, I go out and shop, I know. But I also believe the supply chains will fill as people aren't as sick as they used to be. And while we're seeing this Omicron just spread like mad and the speed of it, you do realize it's not as severe if you've had your vaccine shots as Delta was. I mean, that's just the facts of it. The people that are in the hospital, the lion's share, that's how you have to use the word, the lion's share. Because there's people that have had vaccines and have had boosters and they can go to the hospital, but it's not the norm. It's a small percentage compared to who's in the hospital, which are the non-vaccinated. Now, to give you an idea, a year ago, I started telling you they were going to punish people that didn't get vaccines. Win, lose, or draw. That's not the point. Tonight, they're floating the idea that if you get on an airplane, you have to prove you were vaccinated. In Chicago, they're now a huge fight because on the 3rd of January, to get into almost any public space, I'm talking public being a restaurant, a movie theater, a gym, a museum. You have to prove you were vaccinated. Remember I told you there was going to be that line that eventually forms. The unvaccinated, the vaccinated. They're not saying you have to be vaccinated, but they'll be saying you can't do this, you can't do that, you're not welcome here. Well, that's the other thing that starts happening when this spreads the way it is. Don't write me that I'm wrong. Right. I'm just telling you what's going on. My job is reporting the news, not giving my opinion of it. When I look at the S&P 500, how do you deny it? You're at a new all-time high on a weekly basis at this point. Yes, I was right. The market is poked through. Yes, again, I feel very good about that. This is called a vertical price rise. Why a vertical rise? Because so far, every day's had a higher high than a previous day, and the pattern came from one of a higher high and a lower low, not a trend pattern. So that becomes the vertical price rise. The market is over all the key moving averages. It fought for a while, right through here, about a week, against it, started moving late last week to the upside and accelerated today into overdrive as it got up there. But what you won't get me to do is change my tune. The first time you hit an upper Bollinger Band in a market that is overbought, the professional money typically steps out. I admit, I don't know if the pros are not in the market the way they normally are right now because of this week being a holiday week. A lot of them are gone. Does it change my theory? Not at all. So I don't think you're going to find new buying up there. I think on the breaks is where the buying comes into the market, not there. And ideally, we get it where it's out of the vertical price rise and you're getting a pattern of higher lows and higher highs. When I step over to the Dow, it is very similar. You've got a higher high, a lower low. You came down just a week ago, fought the battle right through here. Not a very good looking chart at that point. Then you started making the higher highs and it carried through, and this is on Thursday of last week. You come in today, the market accelerates. You can see you're going for that high and where you're at. Are you up to the Bollinger Band? Not quite like the other, but get there, and I'll say that I think the pros are going to step out. I think they're doing it to a degree, possibly even right now. When we come to the Russell, I said I doubt that you're getting back up here on this rally. The first thing, and I said this to you last week, it's going to have its hands full with the 200-day average, the 100, and the upper Bollinger Band. Momentum up, lower and low, higher high. This was Wednesday. Here's your rally into Thursday, so you start looking at it. This is today, and with all the other markets moving, it got in there, and it's, it's in a real resistance area. It's using an awful lot of energy. It's already overbought at this point. In the VIX cash, if the VIX were to break down and get to wherever that lower band is, I think you'd see the pros say, oh, I think I am going to come back for a little bit of a trade, and I'll write some puts to see if I can get it back into these averages and maybe the 18. Is the market embedding? So we start looking here. Both numbers are under 20. The day before, not. So the first day was Tuesday. Next day, both are under 20. And Thursday, they finished up embedded. So that tells me once you're embedded that if you get rallies in the market, the pros are going to be there wanting to sell this market, looking for lower lows. And they'll come out if the red line closes over 21. Hasn't done it, so that's what I think is going on. We then get to the 30-year bonds, which are in a downtrend, oversold, trying to make a battleground out of the 100-day average of closes. I'm not as keen on this market being sold because to get it sold right, let's assume you wanted to sell against the 18-day average, you'd be over the high here, and that would break the pattern of a downtrend. The 10-year has a better pattern with lower highs, lower lows, and that's where I think the bears will make their stands right now. But don't get me wrong. Even if you take out 130.28.5, this last rally high, I don't think you're going anywhere on the upside. I think you're caught in here in the Bollinger Band just drifting sideways now more than anything else. In the dollar index, the market is fighting, and if you can't see it, get your eyes repaired. Day after day, the 18-day average of closes caught in the Bollinger Bands in an oversold condition. All we keep hearing is the dollar should be good because of rising interest rates, the Omicron spreading, and we're in such better shape than so many other countries. That's called a downtrend right now. That's not the strength you keep hearing about. It's wonderful to write these things and say them on TV, but as a chartist, I always go to my charts, and when I do my interviews, I bring people into that. I don't want it to be the other. I always ask them, can you bring up charts while we're talking? Because I can talk that story pretty well. In the eurocurrency, uptrend, but it's the flip-flop of the dollar. You're caught in the sideways action. Here it's fighting at the 18-day average of closes in red as well. Difficult to make something out of it. If you put a gun to my head, I'd want to be long this, short the dollar, but I don't have a gun at my head, and it's not something that I have to do right here. British pound is overbought, staying over the upper Bollinger Band 2 days in a row. Be cautious. It doesn't stay very long that way. Certainly between here and the upper 100-day average is a heck of a lot of resistance. It's climbed up because Prime Minister Johnson backed off on putting any more controls in the UK in front of the first of the new year. So what he's got in place, he's leaving, but he's not going to crack down even further. In Bitcoin, I had said I thought this market, when it lost the embedded reading, was going to make a move back to the upside. You were here with me when we talked about it. Market has an outside day up on Thursday. It's the 23rd of December. And here's your move. I think the market's now back in an uptrend, but it's overbought. It's not going to be easy for new buyers to want to come in for that. On the energy differential between Brent and WTI, they've tightened up to $1. You would think that's the case. It must mean that U.S. supplies are more in line now in terms of pricing with what Brent is doing. And remember, the first week of January, we get another OPEC meeting. We'll see what they decide to do. Did you catch? Well, if you get my written updates, I know you caught it. I wrote about the surplus that the Saudis have seen due to oil in the month of, I think it was October. And it was their first major surplus. It carried them enough for this whole year. So this is the first year their economy has not had a budget deficit since 2013. And it's all because of higher oil prices. In Brent, crude, no, you don't buy an upper Bollinger Band if it embeds. No, I can see where the support is. I'm long-term bullish. I think this market's going into the 80s at this point. And the reason is I don't see Omicron, from everything I'm reading, as fast as it's spreading, going to be the shutdown that we saw of the Delta variant. And that becomes the new thing. I'll give you an example with that. In Chicago, they want to close restaurants on January 3rd. Not close them. They want you to have a card to get in them. So the Restaurant Association here is running to the city and saying, no, we need to the 14th to train our staff and all. Are you nuts? We've been living in COVID. Your staff is trained, and the virus doesn't wait for when it's more convenient for you. You do what you got to do, and you put somebody at the door, and if that's what the city rule is, fine. New York's been living under it. They're doing just fine. Los Angeles is living under it. They're doing fine. That's my point. There's always a reason not to do something. That's the way of life. It's easier to do it, and that helps the mass, and that's what you got to do. I am not for hurting restaurant business, but I don't think if you have a card and you have to bring it with you, you've hurt the restaurant business. I don't understand the thinking. But there's a lot of things I don't understand, I guess. WTI crude, it's the same as Brent. You can see where the market's got a problem right through there. Let me come back this way. I went the wrong way. Heating oil, same thing. So I think all of the energies have set themselves up for an area here where some profit taking can set in. Are we embedding? Well, you can't count tonight's data, so you got to get rid of Tuesday. So both numbers were over 80 today. On Thursday, they were not the day before. Tomorrow's the key day here. Gasoline, you got to look at too. And in nat gas, you can see the narrowness here. Why, to try to trade that, pretty difficult. I got to tell you, this pattern lost the embedded reading back here. I said you can no longer be short to my subscribers and to you when this occurred. I said, that's your warning sign. Be careful. You're probably getting back to that 18-day average of closes. You got there, and notice how you've sort of stalled in that area. That's what I'd expect right now. You hear me talk about so much of this, but that's what I teach in my charting course. In my course, I teach swing lines, 5 different moving averages. You only see a few of them here. You get the Bollinger Bands, the slow stochastics, and window envelopes, something I never show you. What window envelopes are is markets don't always go to a Bollinger Band. And when they're not embedded, a window envelope takes precedent over that because more times than not, that's the number that'll get hit. Well, how do you get them? How do you use them? What do you do with them? It's 54 videos in my charting course with charting software, with free access when you get it to my morning subscriber video, with free access to my written updates. This is all part of the course because I want to immerse you in the thinking. It's not expensive. $249 for all that. Just think, the charting software alone is $100. My full subscription update for what you get is $60. So you're paying for 8 hours of videos a few bucks? Come on. Makes a lot of sense. Go to our website, under education, everything is there and it's explained so easy. Treat yourself to a Christmas gift. This is not one that's going in a drawer afterwards. This will stay with you. I'm Ira Epstein. You have a good day.